In this video, we're going to take a look at the harami. There are two versions. There's a bullish and the bearish, and the harami is, harami is a Japanese word for pregnant woman, and therefore, that's your first hint that this is a two candlestick pattern. And essentially what we're looking at is a candlestick that's a little bit bigger. The first one, that is. Followed by the baby. That's the mother and the baby. You'll notice that there's a gap and a tightening of range. So if it is a bullish harami, what you'll see is a downtrend. And then on this last day, we'll gap up and we'll just kind of tighten up a little bit. And it shows that perhaps the market, at the very least, is running out of momentum or could be trying to accumulate buyers. And then you get a move higher, and that is a bullish harami. The bearish one, the exact same opposite is true. We're rallying, we get a continuation candle, and then we get a gap lower, and the market just hangs there. There's no attempt to try to break it out to the upside. So then it becomes bearish once we flip over and roll back on the other side of the hill, as it were. They don't happen all the time, but by their very nature, they tend to happen on daily and higher time frame charts because, of course, you need the gap. So you can't necessarily expect them as an intraday trader. I mean, it's not that you can't get them. It's just that it's extraordinarily rare for that to happen. So here on Verizon, we have a red candle after a nice sell-off, followed by a gap and a tighter and smaller candlestick, and then a break to the upside, and that is a bullish harami. The trigger is once you break the top, or in the case of a bearish one, the bottom of the mother. The stop loss goes on the other side of the candlestick formation, and you just simply manage your trade as per usual. This one makes a lot of sense, to me at least, because you can see we are right here where we had seen support previously. It's a classic signal. No reason to be overly concerned. And especially once you break 50, then you get the psychological break and you continue to go much higher. Here in the Qs, we have one at the top of a very stretched out run. You can see that we had been basically parabolic, had been screaming for some type of sell-off. You can see that this level not only mattered here in this bearish harami that kicked off a pretty significant move to the downside, but later on it had been important a couple of times as well. Very interesting how the market repeats. See, nothing's really random when you start looking at it like this. Both of these candlestick patterns were very useful, and they both worked out quite well. You don't see these a lot, and keep in mind that, so here's an example here. Your first instinct might be, well, this is a bullish harami, but this wick went well below the mother candlestick, so it's not a bullish harami. This is actually a hammer, which, of course, is a very bullish sign. That being said, it did work out, but you have to be careful. You need to make sure that you are completely contained within the mother to be a true harami.